Well, hello and welcome everybody. Joe with you here. It's Maverick. Let's get into a live trade breakdown. What I want to do here with this option lab, just a quick overview of kind of what I like to look at when I'm looking at a trade. And this trade actually came from yesterday's class, or I should say my Wednesday update we do here every single week. So I kind of wanted to pull that. And I think this would be kind of something fun to do throughout the summer. So I might do this probably maybe twice a month is what we're looking for. We'll see how it goes and see how well the community likes it. All right, so let's do a real quick disclaimer since this is a live trade. A couple things I wanted to talk about. For you guys that are in attendance right now, this is going to be pretty beneficial. If you want to follow along and take the trade, by all means, go for it. Just take responsibility for the outcome. Make sure you've got a plan before you do so. Now, folks, for you that are seeing this a little late in the game, 5 or 6 days later, I'm also going to do a little navigation on the ThinkorSwim system, as well as kind of give you my insight on what I look for as a trade. So it can be educational as well, not just seeing the trade. Now, folks, this will be on a live demo account, so there's no front running of me getting in before so on and so forth. It's just much easier that way. So, without further ado, let's just jump straight into it and get started. So I'm in my ThinkorSwim platform. The first thing I wanted to do was kind of a review of what we do week to week and how we analyze the markets and kind of where I come to my overall decision. Now, folks, this is just going to be one trade. There's many trades out there. You might take 2 or 3 or 4. But I like to start with the overall top-down approach. And as you've been following along with us, you know that we have a market that has had a pretty aggressive correction, and it has had a pretty decent bounce off the bottom, and it is back up to resistance levels. So this is the SPX. I like to start with the SPX. It's just kind of a nice half in between the Qs and the diamonds. I like to look at the ETFs to give me my overall market outlook. Now it has created a consolidation area, and today it looks like it might test that. Now, folks, testing it is one thing, breaking and falling apart is another. Not to get too deep and take too much time, but my outlook, Maverick's outlook over the last week or two has been -1 in the monthly outlook and pretty much flat or 0 in the weekly outlook, just because we haven't seen much follow through from the bull side to the up or to the bear side breaking back down over this week, right? Let me get rid of some of these lines. So it's kind of this outlook of, okay, overall I'm bearish. And taking a look at the trend, it's below some moving averages. I've got a -1 outlook on the monthly, and I've got a 0 for the rest of the week. It does look like it's going to roll over. So I'm going to lean towards sideways to bearish. There you go. Now, however you come to that conclusion, folks, we do teach a lot of different types of indicators that we didn't invent. They've been around forever. So whatever indicator you guys like to see, Bollinger Bands, Elliott Wave theories, you can see I'm very simplistic here. I've got a 20 and I got a 50-day moving average. I put a lot more emphasis on price action and volume when it comes to follow through support and resistance. So I've established that I'm going to look for something sideways to bearish. Now I went through a bunch of different trades that we had looked at in the midweek, and I wanted to go with something recent. Now there's a handful of trades that I carry from week to week to week. Keep that in mind. I've got a watch list 2-3 weeks old. It's because a lot of trades will still trigger and still be relevant trades. I wanted to do something that was super fresh. If you guys just came off of the midweek update yesterday, you will see McDonald's. This came from one of our great traders here, and I liked the way this was rolling over. Now you can see one thing that's cool about ThinkorSwim, like you could put on their little bit of their corporate actions. This is earnings. This is an earnings call right here. This little blue light bulb and the red phone there. This is a dividend. Now most of the time when a stock pays a dividend, the first reaction is the stock goes down because it is paid out of the stock price. Doesn't mean that it's going to continue to fall down, but it does kind of kick it in the teeth for just at least that day. You can see where it finished, didn't really go anywhere. However, subsequently, it did roll over. What I like about it is we do have this area of resistance. And now let me get my pen to kind of make that a little brighter here. This area of resistance where McDonald's seems to have stalled out. You can see back here, it actually fell down, it climbed back up. Now this is technically a higher low. So I should be a little bit more optimistic, but I do like this level here, and if you really wanted to get technical, it is a slightly lower high. So even with consolidation, there's a probability of sideways to down. One of my favorite trades here, folks, is a targeted butterfly. So I figure I'm going to do something sideways to down. I'll probably look for some sort of targeted butterfly, shorter term to the downside. Now this is really neat because this class comes into a really good situation where expiration for June is 8 days out. And that is my comfort zone, my sweet spot. Once again, guys, this is opinion. This is what I prefer. Doesn't mean that it works every time. So let's get a cool breakdown. Now, there's a couple things we can do to find out what we want to target at. Now, I'm just going to drag in here, and what I'm doing is I'm zooming in a little bit. And I like to do a couple of things. First thing I want to do is just draw some basic trend lines. A lot of times I like to connect tops and bottoms to give me a kind of a projection of where I could expect this stock to go. Now, if you've seen these before, that's great. I could actually zoom, I should say, back in, draw them a little bit more aggressively if you wanted to. Just what I'm trying to do here, folks, is just catch the slope of tops and bottoms. Let me drop this line and I'll try to explain what I'm doing. Now, I'm not looking for a specific trend line. What I'm looking for is the idea of a target, what could be targets. Now, these intersect on tops and or bottoms. I'm just looking for little pivot points that I could intersect this line on as I draw it. Right? Now, I did throw out this one, didn't I? But this gives me an idea of, okay, in the future, I could be looking around just above the 230 level, 232 level, or if I want to play this most recent slope, maybe a little more reserved, 236, 237, somewhere around there. So I'm going to go ahead and say this is a shorter term target for me, and this would be number 2 target. So there's nothing past the art, and we always love saying this at Maverick, folks. Charting is technical and art, and a lot of it has to do with the latter. There's not a lot of trades that are unsuccessful or successful, I have found, depend solely on the target. Whether your target's a little short, a little long, it doesn't make a difference because we are also playing with options. And options, folks, yes, they are gray area. It's just trying to get close. That's all we're looking for. So there's your first idea. And yes, most of the time, folks, that is enough for me. I'll be shooting somewhere around that 235 mark, 237.5 mark, somewhere around there. I just took the difference. Another thing that's kind of fun is I like the Fibonacci's. There's two things to do. There's the Fibonacci extensions, which you're going to need a couple of lines for. So, and I don't know how fair this is going to be, but I'm going to start it from just that top peak, put it down to this, and then come up and drop in this level. So it needs 3 points. It needs a previous move, and then it needs the current move that it came from. Now what this does is it also gives me, well, it gives me the Fibonacci numbers. And it's kind of funny because at 61.8%, I'm at 235.82. Really close to that 235, 236 level I was talking about. 50% is just above that at 239. Right? I hope I'm reading that correctly. Yes. Okay, yeah, just a little higher there. We do have a 78.6 and the extended 100%, I should say. And this is what most traders will go for, is the 100% move. Now, this is based on its first move down. So if you want to get a little tighter and just measure the last bull bounce, I'll draw that in a second. It'll be pretty close because this is saying 224.26. I'm more of a 61.8 guy. And once again, let me shrink this down to show you. It does project the 161.8%. So past the 100%, 61% for your extended targets for you guys that are trying to do something a little bit more trend specific. I'm going to stick closer to my guns, something a little safe, higher probability, and shorter in time. Right, folks? We're looking at about 8 to 10 days that I want to trade on this. So let's go ahead and erase this and just do your standard sorry, folks, Fibonacci extension. Let's get to it. There it is. And it should work from up to here. So I just took the last move from 100% up there. Now it does draw the extended 161 and so on and so forth, but you could see the 100% moves where I started at 227, But the 61.8%, let me see if I can just stretch this out and zoom it in. There we go, a little cleaner for you. So I'm focusing on this guy right here, 61.8, which is, once again, 237.89. So I got the Fibonacci's telling me, hey, that 235, 237 mark's going to work. I've got my art form of my trend line that I drew. That's pretty darn close to that, so on and so forth. So I think that's a pretty good landing zone. Now, what I mean by a landing zone is a target. Now, folks, when we go through these series, hopefully next week or in 2 weeks, I'll do a diagonal spread or a calendar spread. Everything's going to be, or even a vertical spread, everything's going to be associated to my target. So if my target's between that 235, 237 and a half, and why I'm giving it an area is because I haven't jumped into the options chain yet. I hope you guys are paying attention to that. Chart first, then go see what kind of options we have on it. So that's what I'm kind of looking at. So let's, without further ado, let's go out and take a look at some of those. Go ahead and close this. Now, I always start with the analyze, because what's cool about looking for the simulated trades in analyze, it's already going to be built into the risk graph. You could start with trade and build the trade here, but you're going to have to right click on the trade and analyze it. So I start on the analyze trade, go to my add simulator trades, and it'll build it. Now, once I like it, you'll see that all I have to do is right click and duplicate the order and send it. So here we are. We've got plenty of expiration choices. We've got 1 day out. That's too close. This is what I'm shooting for, is that 8-day shot at 17. Now for you, the 17th of June, which is 8 days out. Sorry, folks. So if I wanted to diagonalize this, I've got plenty to buy against that. I'd probably want to still sell that 8 days out, and I'm definitely going to sell the 235, 237 and a half. I'm selling my target. But then I got to choose. Do I want to go out to July's expiration, 36 days out, buy something in the money against it? This would be diagonal. One thing that's cool about what my example is, the butterfly, is I don't have to worry about that. It's going to be all on and all off at the same time. There's a couple things that I like to do when it comes to management with the butterfly as well, which I'll get into here in a second. So I've opened up the 8-day out expiration. This is where I want to fish. And just to let you guys know, calls and puts. Right? A butterfly spread could be all calls, it could be all puts, it could be an iron butterfly, which I could do calls and puts. Since this is targeted to the downside, I immediately gravitate to the already out of the money puts. Now, why do I do that? Well, you could go to the call side, but the risk rewards are going to be pretty much the same. But now we're dealing with in the money options, and we need this thing to start to go down for them to decay. Right? It's still going to be a net debit. Where out of the money options, it goes to, and the combo increases in our value, and we can sell it for our profits. Why I like to do out of the money options. So if this was a butterfly to the upside, I would use calls, just to avoid any sort of hassle of being called out before it actually gets down to the premise. So once again, it's just preference at that point. Okay, so what are we looking at here? We've got my target. Oh, look at that. We've got a 235. We've got a 237 and a half. We've got both. We've got a 240 if I wanted to get a little bit more or a little less aggressive. But let's start with what we have here. I'm going to start with the 235. So this is the one that I want to sell. I like to sell my target. Now, I've got that built in, but I wanted to add or take a look at some other things. Let's go back to the chart here and see how wide of a butterfly I want to put on. What do I mean by that? Well, we've got $2.50 strike prices. So if I'm going to target this 235, I can do a 237 and a half, which is probably right there. And then let's do 250 to the other side, which would be 232 and a half. Right there. That's going to be super tight. It's a very tight landing zone, folks. This is the area this needs to finish off in 8 days. But the reward risk is going to be super, super high because the probabilities of landing there are lower. Let's take a look at another scenario. 235. Let me get my pin back out. 235 is where we want to hit. But I could open up to 240 and 230. Larger landing zone. Now, what do I mean by landing zone, folks? Well, this is exactly where we want to be. However, based on the cost of these options, we can make money somewhere between here and here. and somewhere between in here and here. And it's not going to be the total amount, but it's going to be a decent amount. So the wider the landing zone, the higher the probability of us making a couple of bucks. The tighter the landing zone, the lower the probability, but the higher the return. Now, if you wanted to go nuts, folks, which I'm not going to do, but hey, let's talk about it. We could go all the way out to, and I've got a lot of traders that like to do this. A lot of coaching sessions I have, traders love to use support and resistance levels. So 235 is their landing zone, but they might see support down here at 225. Now that's right, $10 here. And we'll go up to 245 using where this is breaking as support. So wide area, all sorts of chances to make money. It could probably finish anywhere in this area or down in this, well, I should say back up to this area. Let's just make a big circle right through there and still be profitable. However, cost is higher, reward is lower. So let's cut in the middle. For ease, I'm going to do the 230, 235, 240. Let's do the $5 one. All right, so let me jump back to the Analyze tab. I've already got the target here, and I clicked on the bid to get the sell order. So now I just need to choose my 240. I want to buy one of those, so I hold down Control with ThinkorSwim and click on the ask because I want to buy it, and then I want the 230, right? Let's go up to its ask, hold down Control, and click it. Now I've got all the ones that I want, buy, sell, buy. However, it's not ratioed correctly. So this custom is saying, hey, I don't know what you're trying to do here. So what I like to do is just go ahead and sell twice as many as you're buying on each leg. Now once I'm at a 10, 20, 10, if you can see down in here, folks, I go to custom, it says there's your butterfly. Switch it to butterfly. Now let me drop it all the way back down to one contract as we analyze this. Now at 54 cents, this thing's pretty sweet. Let me get to the risk profile. A lot of traders, well, let me get back to the single at expiration. There we go. So a lot of traders will take a look at this 55 and just go nutso. Hey, let's just load up on it. That's kind of a nice thing to do, which we will, but make sure you keep into consideration your total risk on this trade. I risk full cost of all of my combos, whether it's a straight call, straight put, butterfly, condor, doesn't matter. If it hits the fan and goes to zero, that's as much as I will risk. I do not put my risk in any sort of combo based on stop losses or an area where I'm going to manually exit a trade. So this gives us a lot of flexibility, and I do like this because of this cost. So let's load it up to just shy of $500 risk. I'm just going to go ahead and, which should be what here, folks? Shy of 10. Let's just do a 9 by 18 by 9. Now it does change the risk graph, doesn't it? And it does really steepen that slope. So let's zoom in a little bit because we did do $5 increment. So here we are, and we're just going to go ahead and read this risk graph. So I've got my cursor on the far right and or the far left, and what's cool about that is it will give us our max loss, max gain. You guys have seen me do this 100 times, and I'm going to do it 101 times. Right there. So keep an eye on that. So it looks like we're risking about $477 if this goes above 240 or below 230 at expiration. I'm more than happy with that because our gain could be somewhere around the $4,000 mark, right? Now we know we're not going to hit that absolute tip, but what I do like is if it stays in, I call this the gray area, if it stays above 230 or slightly below 240, we're still coming out with some pretty decent dollars. Now here's something that's really fun to do. 8 days, let me do a little math here. We have this day stepper, and I could do, it looks like I already caught it here. Yeah, let's do times 2 for 4 days. Okay, so this is over time, and you can see the dates represented over here. 17th is the expiration, today's the 9th. At any point, this will tell us what we could expect. So let's say that it goes next week, the 11th, or which is, geez, let's see, that is going to be Saturday. So let's go to the 13th, somewhere between the 13th. Cool. So the pink line. Let's say the stock opens up and it goes to, where are we at right now? Okay, let's say that it opens at about 237.50. And I'm just putting my cursor over that. 237.50, remember folks, that was one of our could be targets. Well, if we put this on for 55 cents, it gets to 23 or 237.50. I'm taking a look at that box. We're up 580 bucks. Now what I love about this, I've got a 9 by 18 by 9, which means I could take half that off or 3/4 of it off. All right, let's say that another week goes by, we're at the 15th, 2 days before expiration, this thing's at our target of 235. I've got $1,000.21 locked into that. I could take the other half off. I could take another third off if I wanted to do it. So what I love about this is you can take these positions off as they perform and decay. Keep in mind, 8 days, as the days go by, this helps us. Even though it is a debit spread, it helps us. The other thing is direction. It doesn't need to get to 235 on the 8th day. Now that would be ideal, right? Because we're looking at what, almost a $4,000 gain. Let me just go back to the day step expiration. Yeah, all the way up here, but it doesn't need to be there. It could be anywhere along this line between 230 and 240, give or take 55 or 52 cents now, right? Our cost basis up or below in those numbers, and we are ringing the register. One of my favorite things about the butterfly spread. Okay, so I've touted it enough. Let's take one last look at the chart here, because what I like to do is kind of finalize this thing. Take a look at it visually. One last look, and then we'll go ahead and place this. So 235 is our sweet spot. Now, folks, that's we're asking a little bit of this to come down here. However, we know that all we need to do is get somewhere between that 240, 235. Remember, at 237.5, we're sitting on a $500 profit come Monday. Today's Thursday, folks. That's Friday goes a little bit further down. Monday, it's a little bit further down. We're hitting the register for $500. That's if we take it all. We don't have to take it all. Sorry, folks. Let me draw my last line. 230. That looks a little bit more realistic, doesn't it? Now, for some of you guys that aren't as bearish. Now, I'm definitely a -1, 0. If you're a flat 0, you can move this whole thing up. What I mean by that is we could choose this pin is a little slow to grab. A 240. Well, that is not the line. That is a box. Sorry, guys. Let's try that again. 240, 245, 250. Now, this is an at the money, and it should bring in a pretty good risk reward. But your ideology is going to be somewhere between here in that next 8 days. Or you could want to raise it a little higher. You could say, Joe, I believe in this chart, or a little bit of the support. Sorry, guys, let me zoom this in. Thinking that this higher low is going to do something. That might pivot. You might want to target the butterfly like a 245, 250, 255. It really doesn't matter. It's on your bias. I'm taking into consideration what the chart's doing, the overall motion of the ocean, of the markets, and erring to the bear side. All right, so I guess the only thing left to do is to place this bad boy. And look at that. It's actually gone down a little bit, which probably shows me the markets this thing is moving a little bit higher. I still trust it. I still like it. Now, what I like about this is all I have to do is right-click and go to create duplicate order, and this puts it into the queue. And now I can play with it. This is your bid and ask. You can see I'm definitely at the midpoint. The demo is definitely going to give it to me around 49 cents. So I'll just hit confirm and send it, knowing that this is actually now about 490 bucks. Just shy of that, actually 3 and change, right? So once I hit send, it should go right up there and get us filled. Oh, and there it goes. Rings, and we are off to the races in this position. Let's take a look at our monitor tab. You guys can open it up here. You can see here's our position. I'm going to keep an eye on this thing over the next, 8 days, but we can talk about it next time we have a lab and see how we did. Hopefully we did pretty good. Now, with all trading, guys, we don't know where this is going to end up. McDonald's could go straight up in the air. But hey, I've got probabilities and faith on my side. All right. Well, thank you so much for joining me. If you guys have any questions, you know how to get a hold of us. Until next time, bye, everybody.